Let's move on and talk about the market, which got a bit of a shock or nervous bout yesterday. Nooresh Merani is here with us. Nooresh, how did you read yesterday's bit of a blow to the traders? A lot of stop losses got triggered because of 1,000-point fall on the Sensex. And overall, how do you see the structure of the market, the way we came from March lows to October highs? How are things developing now?
So the move from, say, beyond 11,600 to almost 12,000 was with very low breadth. When I say low breadth, all the other indices, like the mid cap, the small cap, even the Nifty 50 equal weight, were not catching up on the move. So that was not a very strong move in that sense. So what we've seen yesterday is just a normalization, and we need to get into a range going forward. So till the time we don't see a clean trend across broader indices, we would expect the markets to be range bound. And overall, we've made a very strong move right from the lows of, say, 7,500 in March. And we've seen 12,400 was the previous high. So at 12,000, 12,400, we would expect some bit of resistance always in the coming weeks and months going forward. So we would expect getting into a range from here on.
Nooresh, you had your call on pharma stocks, chemical stocks played out very well. But it appears lately the way IT came back in last 2-3 weeks, leadership to IT. There are odd up moves coming in banking as well. Do you think, two questions, do you think this IT up move will continue, or this is just a profit taking bout which is happening right now? And two, is there merit to look at stocks which have got beaten down a whole lot from the large cap two sectors, FMCG and banking? Does it merit some stock picking there or not yet?
So Nifty IT was a clear leadership move right from the time the Nifty IT started breaking at about 16,000, 16,500. And we started off with HCL Tech, Infosys, TCS, and almost every IT company has participated. And we would expect some bit of, say, pause in the next couple of months for the large cap IT, because the move has been strong. They are very overbought. And these are not, say, companies which are very small. Most of the large IT companies are really large market cap. So we would expect some pause in the IT segment. Maybe we would see a shift towards the smaller cap IT. So we've started seeing some breakouts in, say, Oracle Financial Services, something like a Zensa Tech starts coming up, Sasken, etc. A lot of small caps have come into the 52-week radar. So that is where the shift could be going forward. And in terms of FMCG, the only stock which I'm watching closely really is ITC, wherein we've seen a huge amount of change in terms of the shareholding pattern, wherein FIs have gone from 20.89% a few years back to almost 14.5%. And similarly, there is a similar increase in mutual funds. The cumulative OI is very high. So what we expect is whenever there is huge volume, that is the time we'll watch for a turnaround. So that would be a zone of 150, 160, where we'll watch out for a turnaround or maybe even take a preemptive buy around those zones, or whenever it crosses 175, 180. So selectively in FMCG, we would look at ITC more as a, say, an action after price reaction. Say, either it shows momentum or it cracks down to 150, 160. And apart from that, Hindustan Unilever, Nestle, etc. Shown very weak trends in terms of the bounce back. So I would be avoid on all the other FMCG.
Right, Philips Carbon, that's a small cap which has just come out with the numbers. Profitability is slightly on the lower side, and so is top line, but the stock is gaining 2.5%. Nooresh, what are the stocks which you have on your radar from the mid cap space? Because the observation is that even the data which came out of fund action shows that clearly funds have started looking and hunting on raising, shares they're holding in mid caps, and the breadth is actually widening. What are the names on your radar from the mid cap space?
So on the mid cap side, we are looking at, say, mid cap IT and small cap IT. So companies like Sasken, Zensa Tech, and even smaller companies in that zone. And secondly, from the same zone, say, we do not like banks as much, as though we expect a bank Nifty could head up to 25,000 also in the medium term. But maybe we would look towards a Muthoot Finance and a Manappuram which is where we see great leadership in the NBFC space. So where the stock prices have shown great leadership even when the market corrected. So we would go with gold finance companies for the short term. So, and in the mid-cap space, a reversal zone which we are looking out for is something like gas companies like MGL, IGL, Petronet, which have corrected a lot. So once they start showing some reversal signs, which we are seeing in the last couple of days, so you may look at that. So those are the names we are watching out for as of now.
Right. All right, Nooresh, we'll let you go on that one. Thanks so much for those inputs. That was Nooresh Merani looking at the various stocks and sectors right now.